Very few people, or even the world's biggest financial organizations, believe that precious metals will soon decline from their current record highs. And we were caught off guard when one major bank, one of the biggest in the country, just upgraded their gold and silver outlook significantly. I'll identify them and describe what they're saying while we go on our adventure. Yes, major financial institutions have been making very optimistic predictions for the past 12 months, if not longer. All signs point to the continued ascent of gold and silver, so there must be a rationale for this trend. So far, that has been the situation. There appears to be little indication of a slowdown, according to Bank of America, which has increased its prediction since gold has surpassed $4,000 per ounce and silver has reached $52 per ounce. Quite dramatically. Yeah, my mind is blown. From this, I will extract two bits of source material. In preparation for the 250th anniversary of the United States in 2026, we will first examine the predictions made by Reuters regarding this institution. Therefore, it is for this reason that I possess this 1.2-ounce medallion of bicentennial gold that was struck by the United States Mint in 1976. Now, in 2026, Bank of America is projecting that the price of gold will reach $5,000 per ounce. Hold on a second, did you hear what they said about silver? The precious metals estimate for 2026 was increased by Bank of America on Monday, according to Reuters. The outlook for gold was boosted to $5,000 per ounce, with an average price of $4,400 per ounce for the year. And get this, silver is going for $65 Oz, with an annual average of $56.25. Wow, that's impressive. In my opinion, that is somewhat unexpected. Now, to be honest, given the current trajectory, it shouldn't come as a surprise if we see similar costs here at home, due to the same forces that are being exerted throughout the globe. They persist, particularly in the LBMA and other domains. Take a second to consider this, though. In 2011, the price of silver reached an all-time high near $50 per ounce. In today's money, that's roughly $72 per ounce. Thus, even after accounting for inflation, silver prices would remain below their all-time high. Nevertheless, it is clear that any figure above $4,000, and especially any gold price above $3,600, has surpassed its 1980 all-time high when adjusted for inflation of $850. Despite the possibility of a short-term pullback, the bank continues to anticipate higher gains for both metals in 2019. Given the government's fiscal deficits, growing debt, and conflicts over how to lower the current account deficit, the bank predicts that the White House's unconventional policy framework will continue to be supportive of gold and other precious metals. For 2026, Bank of America has raised its gold projection to $5,000 Oz, the first large bank to do so. Also last week, spot gold prices surpassed $4,000 Oz. Plus, it has been trading at a level far above that recently. According to Bank of America, if investors want to see gold prices rise to $6,000 Oz, they will have to buy 28% more of it. But it's possible that there are other factors that will push the price of gold up to $6,000 Oz. The actions and accumulations of central banks will continue to have a significant impact, as has been the case since 2022 when the price of gold more than doubled. That is quite astounding. Here we know what a gold nugget is worth. We are still accumulating it, along with silver, according to our own budget. You should definitely check out my pals at Summit Metals. They carry a wide variety of gold and silver bullion, including collector pieces and stacking coins, and their range is always expanding. If you want to experience firsthand their excellent customer service, click the link in the description below. The bank now predicts that silver will remain sustained even if demand would fall 11% next year due to a continuing shortage of supplies. The Silver Institute Industry Association predicts that the silver market shortfall will continue for the next 5 years. The bank noted that the London market is significantly tighter due to the shift of silver ounces into New York in anticipation of tariffs that did not materialize. This is reflected in significantly higher leasing rates. When a result, volatility may rise when the most recent dislocations begin to gradually normalize. Could drive down silver prices in the near future. According to their reporting, such is the case. Indeed, that is somewhat accurate, particularly when considering the current situation in the London markets, where they are attempting to send silver to the LBMA. Nonetheless, a supply shock exists in that area. The New York Post has joined the chorus of media outlets covering this story, writing that they have raised their forecast and are highlighting the recent highs. Investors hastily purchased gold, a popular inflation hedge, in response to rising trade tensions, as well as unpredictability caused by the ability to retain value even while other assets decline. Despite warnings of a potential pullback in the near future, Bank of America continues to anticipate a further climb in 2026. We may therefore be able to take advantage of a favorable purchasing opportunity in the early months of 2026. The outcome will depend on us. Naturally, this is their prediction for its future. It is not guaranteed that it will occur. Looking ahead to 2026, though, the bank predicted that gold might reach $5,000 Oz if investment demand increases by 14% like it has this year. This is the part of the New York Post story where I am somewhat disappointed. A number of factors have led to gold's meteoric climb this year, including concerns that Trump's tariffs may lead to inflation, persistently rising interest rates, a declining U.S. dollar, a government shutdown, and a sluggish labor market. Truthfully, though, tariffs do not lead to price increases. You might call it a tax, but it won't lead to price increases. Inflation can only be explained by increases in government expenditure. Consequently, the Federal Reserve is increasing the issuance of these dollars to cover those expenditure demands. They aren't necessities, of course. All of them are desires. Almost all of the money that the government spends these days is on wants. A large portion of the allocated funds is superfluous. The government is simply overlarge. That's a different tale. An increase of around 50% in 2025 has been seen in the price of gold. Inflation has driven the price to an all-time high, and this year is the best since 1979. Gold may easily reach $5,000 Aussie within a year, according to Wheaton Precious Metals CEO Randy Smallwood, and quadruple that by the end of the decade. Wheaton Precious Metals predicts that by 2030, the price of gold would reach $10,000. Right now, I have no idea if it will turn out to be true. The outcome will depend on us. I would have laughed at you if you had asked me in 2022 whether the price of gold would have quadrupled by 2025. Therefore, I don't think anything is out of the question. Whatever the case may be, he is certain that gold will surpass $5,000 in the coming year. If it continues on its current path, it might reach $10,000 per ounce by 2030. He claims that would come as no surprise to him whatsoever. This year, investors have flocked to gold due to geopolitical unpredictability and a restricted physical supply, benefiting Wheaton, which offers upfront funding to miners in return for cheap commodities. Year after year, major stock indices have also reached new heights. As Trump attempted to allay market fears over the weekend, the Dow Jones Industrial Average surged 582 points Tuesday. We will be okay, he assures us. China isn't a problem. The highly esteemed President Xi has simply experienced a mishap. That serves as some background, as he mentioned in a post he wrote on Truth Social. The prediction from Goldman Sachs has also been raised to $4,900 from $4,300. That decision was reached immediately before to Bank of America's. As a result of banks' efforts to diversify their reserves, the central bank bind anticipates an average of 80 metric tons in 2025 and 70 tons in 2026. The experts at Deutsche Bank have also predicted that by year's end, gold prices would surge above $4,000. It has already taken place. At the end of last month, the Federal Reserve made history by slashing interest rates by a quarter point, the first such decrease since December 2024. There will likely be other rate decreases announced at the meeting later this month and in December. Since gold is already an attractive investment due to its lack of interest payments, a drop in interest rates would likely cause Treasury yields to fall as well. Along with silver, it is a desirable asset. Silver is $65 per ounce. It is very astounding to consider. Is it going to happen now? It is unknown to us. In all honesty, nobody knows. Knowledgeable people make up the best of that bunch. Well, they're only guessing, just as I am. Anyway, time will tell. I'm keeping both metals in my holding since I'm still optimistic on them. I guess we'll find out later. Regardless, that is the statement made by Bank of America. In 2026, what are your thoughts on gold? Tell me what you think about silver in the year 2026. Although silver still has some way to go before it reaches a record high in relation to inflation, it is remarkable to see it finally achieve new highs, at least for now. Also, 1980 is totally off the table for that reason. It was a one-of-a-kind outlier. This was an isolated incident involving the Hunt brothers. Presently, there are occurrences that are, definitely unusual. Absolutely, without a doubt. This is a unique moment. When this is ended and the supply chain is back in sync, if just to a decent or tolerable degree, I will be very interested to know how everything turned out. And when the precious metals market finally settles down, how much will it cost? This is fascinating. I need to know how much time that would require. The fees are expected to rise significantly because of something that Bank of America will do in 2026. Quite an unexpected turn of events.